I'm sure by now you've heard that Google and Amazon are doing a stock split. And in today's video, what we're going to be covering is what a stock split is, how to participate in the stock split, and what the deadline for this participation is. But before we get into today's video, make sure that you are subscribed, as this is your channel for understanding finances, debt, investing, and how to get ahead financially. So if that is something that interests you, I want to make sure that you are subscribed and that you have that bell notification on, because I always drop new content for being able to understand this game in a very basic type format. So definitely make sure that you are subscribed, but let's go ahead and get into it. About a week ago, we heard that Amazon and Google are going to be doing a stock split of 20-1, which is really big. In 2020, we saw Apple do a 4-1 stock split, and Tesla that same year did a 5-1 stock split. So for us to see a 20-1 is really big for investors, and it helps you add more stock to your portfolio. So let's talk about why these stock splits actually happen and what this is going to look like for you if you are able to participate in this stock split. So what is a stock split and why does a company do it? So a stock split is basically if you hold one share of that stock, what the company's going to do is they're going to give you, in this case, 19 more shares just for holding one. So instead of having one share of that stock, you now have 20 shares of that stock. Now you might be saying to yourself, well, that's free money right there. Why would they give anybody free money? Well, it's not really free money. What they're essentially doing is they're adding more stock to the company itself so new investors can come in and start investing. And if you notice right now, the price per share of both of these companies is between $2,700 and $2,900, which is a lot for the average everyday investor. People want to get involved in Amazon and they want to get involved in Google, but they just don't have that type of money laying around. So what a stock split actually does is they're trying to get a new influx of money into the company from an investment standpoint so that they can use that money to continue the growth of the business itself. So they create new shares of the company, but to make it fair for investors who already have shares in the company, they give them additional shares. So if we look at this example of a 20-1 stock split, what they're going to do is we're going to look at this from just a round number standpoint. Let's say that the shares of the company are going for $3,000 a share. What they're going to do is they're going to take that $3,000 and they're going to divide it by 20. And that's going to be the new price of the stock when the stock split happens. So essentially what's happening is old investors are getting 19 more shares. So their shares still equal the exact same amount as what their stock valuation sits at right now. So after the stock split, even though they have 20 shares, that 20 shares will still be a value of $3,000. So stockholders are not getting more money for being individual holders already. What they're getting is they're getting more shares. So what's going to happen is as this stock actually splits, and the price of the stock then will continue to go on the rise because they're using that new funding to continue building the company. Those shares over time, as you hold more of them, will equal more money in the long run. So it's not that you're getting more money up front as a holder, but you're getting more shares. And those more shares down the road long term will help you get a bigger increase in your actual investment itself. So that's really the premise behind it, is they want to encourage new investors to get into their business itself. And what that does is it creates more financial backing, which helps them better build the business itself. But also for the old investors, they're not losing any sort of money when this stock actually splits. They're building onto their portfolio. So it creates a win-win situation for the company. The company gets more of an influx of capital itself for investment, but old investors also get more shares of that company. So as they continue to grow over the long term, those old investors are still being rewarded itself. So it creates an environment of healthy investment for new investors and also old investors as well. What if you don't hold Google or Amazon, but you want to participate in the stock split? Can you still do it? And the answer to this is yes. So the way that stock splits work is the company will set a deadline. And that deadline, they'll say you have to own a share of stock by the end of business on this day, because we're going to check our records for the individual stockholders. And if we see that you are a stockholder on the end of business that day, we will reward you with your 19 additional shares. So how it's working with Google is saying if you are an individual stockholder by the end of business on July 1st, so you have a deadline of July 1st. If we look at our records and show that you own at least one share, what we're going to do is on July 15th, we're going to reward you with 19 more. So they give you a little bit of time to still be able to buy this individual stock and participate if that's what you want to do. Amazon is doing June 3rd. So if you're an Amazon stockholder and you have to own at least one share, by June 3rd, they're going to check the records at the end of business that day. And then if you are an individual stockholder on June 6th, you'll be rewarded with 19 more shares. So it is still not too late. You can still participate in this stock split if you choose to. And it's a great way for you to add more shares of that stock and not have to pay the $3,000 that it's going for right now. But keep in mind that the value of these is going to be the same. So you'll still have technically the $3,000 that you will have paid for the stock. You'll just have more shares than what you had with just that one. So I hope this video helped you understand stock splits a little bit better and also gives you a chance to participate in this stock split if that's what you choose to do, because this is a great opportunity for you to add a really great stock to your portfolio for the long term and help you win. And if you did enjoy this video, make sure that you give this a big thumbs up and smash that subscribe button and also turn on the bell notification, because I am always dropping new videos to help you better understand the investing game and really just break things down as simple as I possibly can. So again, I hope that you did enjoy this video and have a great rest of your day.